What is good around? For this episode, we're going to be covering SMTs, also known as smart money technique or reversal. So, smart money technique, SMTs, what does this actually mean? So, ES and NQ are correlated asset. What that means is they move synchronously. Is that a word? Synchronously? Maybe. We'll see. But they essentially move the same in the sense that if there's one drawn liquidity on ES, NQ will most likely go to that same drawn liquidity. And when NQ goes up, ES also goes up. When NQ goes down, ES also goes down. But there's times where this correlation does not happen, and when the assets uncorrelate, this is called a smart money technique / reversal, and you can expect a reversal from that level. It's basically an indication in price telling you that we are going to be moving the opposite direction. Okay, so what this looks like is, let's say, for example, this is your ES chart, right? And we have a low right here. So this is your low, you have a high, then you have a lower high, and then you have a higher high. And then on NQ, what it looks like is you have a low, you have a high, and then instead of having a lower high, you have a lower low. And this is a bullish SMT. So with that lower low, then we have, same higher high, but this is that indication right here that price is going to reverse, and we should go higher. Now, keep in mind that it does not matter which pair leads, right? So it doesn't matter whether ES is the lower low or NQ is the lower low, right? We can flip this around, and it doesn't matter. I mean, it matters slightly. It is something to note that if, let's say, NQ was here, NQ will most likely have a better delivery and faster than ES, and we might have a little bit of a slower delivery on ES because just the one that leads is actually going to have sometimes a better delivery. But I do not care if there's that SMT there on ES and I have to trade NQ here. I'm still going to trade NQ. That's not going to make me trade ES, right? And then same thing over here for a bearish SMT. We have a low, we have a lower low, we have a high, we have a low, we then have a higher high, and then a lower low. I said that right. Yep. And then for ES, we have a high, we have a low, and then we have a lower high, and then a lower low. So since we have a lower high on NQ, this is a bearish SMT. Since this high gets swept and this high did not get swept on ES, this is an indication of a bearish SMT and an indication that price will reverse. So we can actually go into the charts and look at an example of a bearish SMT that I had today that actually formed my whole entire daily buys for today, and obviously delivered to all of our draws on liquidity. So what a bearish SMT looks like is let's go on to this 1 hour time frame, and I think the SMT was actually here. So as you can see here, we have highs here, right? So this is a level of buy side liquidity. This is a high right here. We also have a high right here. And then we also have another high right here. Okay. So these are the highs that were made. Or let's just go to like this time here. Right? So you have two highs here. And if we go on, and these highs are not taken on NQ, right? These highs are not taken on NQ. And then if we go on to ES, and what that ES chart looks like, Thursday, January, what is this? January 32nd, January 2nd. Okay, wait, I think I'm not on the hourly time frame. Yeah, that's why I was so sorry. Okay, so if we go onto the ES chart, what this looks like is actually this high here, right? So how you can really identify it is just looking simply at the time. So as you can see here, this on the hourly time frame, this is the 1 p.m. candle, and then it obviously shows on ES, as you can see, also 1 p.m. So this high here and this high here was at 7 o'clock, right? So you can see like ES and NQ, typically they move correlated. When one low makes a low, one asset makes a low, the other asset will also make a low. But then when that uncorrelation stops, and it stops right here, when we have this high put in place, and this high was not put in place on NQ, what happens? This is a bearish SMT, right? So not only this high is that SMT, but then also this high got taken. So both liquidity pools here got taken on ES, indicating a bearish SMT, indicating a reversal in price action to then go lower. Okay, and then we obviously get that right there. So another example, let's just give an example of a bullish SMT. So an example of bullish SMT could be just right here, right? So here we had a previous month low right here, and this was our previous month low here. So this was like our main drawn liquidity for the day, right? And this was taken on NQ, but it wasn't taken on ES, right? So ES did not take this low, whereas NQ did. And this is an indication of a bullish SMT, all right? So this is your bullish SMT now. And again, guys, note that, please note this, that it does not matter which asset leads. So like I can literally flip this around from ES to here and NQ to there, and it's the same thing. It's still a valid SMT, and you can still trade whichever asset you want, right? And then after that, we get a small reversal from that point, right? And this SMT holds, and then you can even go down. This works for every time frame, right? So I can go down to like the 5-minute time frame, and as you can see here, we have a bullish SMT that sent price further. So a lot of people actually ended up taking longs today after this happened, right? We have the 12:50 p.m. low, or 12:45. Let's just go on the 5-minute chart here, so it's easier to see. But we had an SMT here, right? So this low was not taken on NQ, but it was taken on ES, right? So this is an indication of bullish SMT, and then we then trade higher. So it's just you always want to be using ES. We always are trading using NQ and ES because it is a correlated asset, and when those assets uncorrelate, it's often an indication of reversal. Now, I do want to say this as like a little disclaimer. There are SMTs that are going to be forming all of the time. All of the time, you will see SMTs happening on like the 1-minute time frame if you're dialed in on that 1-minute time frame. Why is that? Because there's also, the market sometimes lags. Like for example, like right now, the market ES is a little bit lower, and we probably could take this low right now before NQ. But does that mean that's like a bullish SMT and that we're going to reverse 100 points from there? No. So what I always tell people is to focus on the higher time frame. Focus on the 15-minute, focus on the hourly, and focus on time frames where you can expect manipulation, right? So at this point in time, why can we expect manipulation here, and why was I super bearish? Well, because this was a 4-hour fair value gap, right? So this 4-hour fair value gap, this is got hit here on ES, right? But it didn't get hit on NQ. So like this is a huge area of rejection, and it's an area where I can expect, I just spit, an area where I can expect, that was disgusting, an area where I can expect manipulation. Okay. Yeah. And that's pretty much that. And also at previous month low, that's an area where you can expect reversal, right? This is a huge liquidity pool. So expect SMTs to happen there. And when you just put it with a bunch of other confluences, obviously like you don't just trade one confluence we're going to give you and then just go from there, right? Just adding them all together to then make yourself that A+ setup to then get yourself that confirmation for your bias or your drawn liquidity. But yeah, that's what an SMT is, and those are some examples of what an SMT looks like. Hopefully you guys did enjoy this video, and I'll catch you all in the next lesson. Peace out.